Good evening, Wealth family. How's everybody doing today? All right. Let me make sure y'all can hear me. Why? All right, guys. Today we are going to go further with our lessons. The day before we went over zones. Yesterday we went over confluences. And now we are going to go over entry techniques, okay? So just a recap, right? If we look at my chart, zones are these purple areas with that blue line in the middle. Your zones are where you want to enter and exit the market. Confluences are candlestick patterns or things that you find on the chart. Okay, you need 2 or 3 of them. Some of our confluences, as we talked about, were candlestick patterns, rejections, impulsiveness from a candle, a displacement candle. And today we are going to combine all of those and do some back testing and show you how you read the candlesticks and how you read the chart live when the chart is moving, okay? So this is GBP USD. This is the current signal that I called the other day on live. I'm just going to delete my chart and we're going to do a top-down analysis, okay? Top-down analysis is how you mark up your chart, mark up your zones. And then we're going to come down to our hourly, our 30-minute, our 15-minute. We're going to turn on our replay tool and we're going to play out price, okay? So when I do a top-down analysis, I come and I start on my monthly time frame. I want to start to box in price as much as possible. So current price is right here on my dotted line, okay? Right here. Now, I want to look within this area and I want to look to the left to see if there is rejection happening in this area or is there impulsiveness. In order to notice rejection, you'll look at your candlesticks, okay? And you want to see, is there a lot of wick going on? Is price wicking around a lot? And impulsiveness is these candles right here, right? Price just went to his destination fast and in a hurry, okay? So here we have a lot of wicks. Here we have impulsiveness, okay? So right here on my dotted line, I'm looking to my left. I see that for some reason right here, I'm getting a lot of hesitation in this area. Like price, like there was a zone here and price tried to break it, right? Like it just kept touching it, kept touching it, kept touching it, and then finally price broke through and sold. So what's going on in this area? So I want to continue to look for my zones, okay? We're looking for order blocks, reclaimed order blocks, fair value gaps, supply and demand zones, all right? So I do see that I have an order block here. This last up candle before this impulsive down move. So I'm going to take my rectangle tool and I'm going to go from the high of this candle to the low of this candle and I'm just going to draw it out. All right. Now here, I'm going to zoom out so that we can see current price and price to the left. So I drew up this order block and I'm going to extend it to my right and my left. Once I extend it, I want to see how many times did price touch this area. So if we see here currently to the right, price hasn't even reached this area yet. But over here on the left, we have rejection, we have rejection, we have rejection. So this is telling me that this is an area that price will more than likely return back to. So I'm going to take my horizontal line tool and I'm going to put it on top of that blue line. All right. Now I'm going to delete my box. Now I also want to try to get as close to price as possible. So again, current price is this red line. And if I just look here to the left, I see this fair value gap here, which lines up with this rejection. And then I see another fair value gap here. And if I zoom in, here you go. So I'm going to take my rectangle tool and I'm going to draw from the previous wick of the gap to the wick after the gap. All right. And as we can see, currently price is sitting on this zone. Okay. Price rejected it to its left. And this is where we have all of this hesitation. So I'm going to replace this box with the black line. Delete my box. All right. So now I have price boxed between two zones. Okay. One above, one currently on price. And then I want to look and see if I can find a zone underneath price. And as I'm looking to my left, the first thing that pops out in my eye is this fair value gap right here. So I'm going to mark this fair value gap. excuse me, mark this fair value gap. Let me make sure it's right. All right. So I'm going to mark this fair value gap, and I want to see, did price react to this area? And yes, we can see over here on the left, we had some hesitation, right? Price traded through it, price came back. Price traded through it, price came back. Here, price came on top, and then it came back, touched it again. Price came underneath, came back, touched it again. So we have a lot of rejection in this area. So this was another zone, okay? And remember, zones are just places to where we're looking to exit and enter the market, all right? So I just want to make sure I get 3 candles on my monthly time frame. I'm sorry, 3 zones on my monthly time frame. 1 above, 1 as close to price as possible, and 1 below, okay? Now I want to come down to my weekly time frame. I want to zoom out. And I want to see what price is telling me on the weekly. It looks like price hasn't been up in this area. If we just come over here and you look down at the bottom, it says Monday, April 19th, 2021. Price has not been this high since January of 2022. Okay? So price is slowly making its way up to a high that it hasn't been to in a while, and it's slowly doing it by making higher highs and higher lows. So currently this is telling me that GU on the higher time frame is in an uptrend, so we should possibly be looking for buys. Also, if I zoom in into current price and focus on our last couple of weeks of candles, this candle right here pops out. It just sticks out to me compared to these candles. But the story on these candles were rejection, 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 rejection. Price tried for 4 straight weeks, a whole month, to break this area. It couldn't break this area until this week. This week gave us an extremely impulsive candle. It closed on top of the zone, and not only did it close on top of the zone, the buyers closed at the top of the candle. Okay, sellers tried to come in. This is why we have this wick, right? Buyers pushed the price all the way up here. Sellers tried to come in. They couldn't take control, and price ended at the top of the candle. Not completely at the high, but at the top. This candle right here is saying that buyers took over the market, okay? Not only that, if I look at the week before, I notice that this candle is now a bullish engulfing candle, okay? Price completely ran the low and the high of the previous week. So when I see a bullish engulfing candle, I know that price is trying to buy. Now, when you see these on the lower time frames, it's okay to enter at the top. But when you get these on your higher time frames, you want price to pull back to 50% of this candle. So I'm going to measure this candle with my rectangle tool. I'm going to go from the low to the high of this candle. And 50% is this blue line. And price did just that. It came back to 50%, and now it's trying to continue its bullish move up. But it could actually touch this line for 4 more weeks, just like it took 4 weeks for price to finally, well, really 5 weeks, 1, 2, 3, 4, 5. It took 5 weeks for price to finally break this area. It could take 5 weeks for this candle to leave this area. We're not sure, okay? But we know eventually it is going to want to buy, all right? Just like we got down here. We got our impulsive move through. Price came back, retested it, and then went bullish. This is what we want to see here. We got a retest, and now we're just waiting for price to break bullish. Now we're going to come down though, because from here to here, I want to measure this zone. This is a 431 pip zone. Sometimes GU will do 400 pips in a week, right? Like these big bullish candles, if I measure this, this was 402 pips, right? But sometimes it's going to give us these doji indecision candles, and it's only going to give us 175 pips. So I want to break this zone up as much as possible, okay? And I want to break this zone up also because it is possible that price may decide to come underneath and sell, okay? So now I'm going to come down to my daily time frame. I'm going to zoom my chart back out, and I'm going to look to my left for another zone. And over here on my left, I can spot a fair value gap right here. All right, and as you see, once that fair value gap is marked over here to the left, it's respected, and it was respected on the right. So this is another area to where we would expect for price to come to. If you can see right here on where this dotted line is, this is where current price is. But let's just zoom over and let's see if this area has already been touched. Okay, so this area has already been touched. So now I want to find another area above this, okay? And since I'm here, I can mark off the area below, okay? Even without a zone, right, you have to start to train your eyes for the impulse and the correction, the break and the retest, right? And what area did it retest back to? If you just look over to the left, you just see how equal this area is. There's a fair value gap or something right here. Support, not support, resistance. This will be resistance. Price breaks through, it comes support. There's something over here on the left that caused this rejection, and then price impulsively broke through and then came back and retested. All right. I see a fair value gap here, and I see a fair value gap here. I'm going to mark both of them. As you can see, both of them were respected. Let's go back to current time. All right, and even in current time, both of them were respected. You see right here, and then price broke through that and it hit this one, okay? Let's go back up here now and let's find our other zone above that one. And as you can see, price over here was making lower lows and lower highs, okay? So at the top of each structure point, you could put a zone, but then that would be quite a bit of a lot of lines, right? Although we have rejection point at each area. But what we want to find is the rejection point with the most rejections, okay? And I see a fair value gap right here. All right. And you see how that makes more sense than all of this noise. This area gives your trades room, right? So remember these zones we're trading to, we're entering and exiting, and this was 178 pip fall. Okay. Then it happened again. Price came up. Although it closed on top, then it ended up reversing. Okay. And then it got underneath there. You take it right back. Same trade. So we're going to use this area here. All right. And now I am going to go to current price. And now this is my next take profit zone. But for now, the first take profit zone is here. And then, you wait for price to get on top, retest it, and then you can take it to here. So now on my daily time frame, we have all of our zones, and this is current price. And another thing that I see at current price is a trend line. Let's see, 2 rejection points. I see a rejection point here, a rejection point here, right inside of this fair value gap. So I am going to mark this fair value gap. Just remove the background. And then I am going to mark up this trend line here. All right. And then I have 3 rejection points along the top. I am going to mark up this trend line also. Give me one moment. I'm sorry, y'all. My dog is the only one downstairs, and I hear noises I shouldn't. What, ma'am? Okay. So now I have this trend line above, this trend line below. When you have 2 trend lines, and I can come down to the hourly, probably even the 15-minute. You see we have 2 trend lines. Let's tighten them up. Going to tighten them up because that was a little all over the place. Do this one. The first rejection point to the second rejection point, okay? Everything else will add up. All right? So this is a wedge pattern. You see price, if I zoom out, is like squeezing into this wedge here. It's not, my trend lines aren't even. They're going into a triangle. They're going into a point over here. Uh-oh. Okay. So this, I believe, is called a falling wedge. This is why we need to start the chart pattern book, because I'm really more familiar with parallel channels. This one, I believe, is called a falling wedge. So let's look it up together, okay? Ah, man. I hate that we can't see it. How much of this can y'all see? Okay, there we go. All right, exact same pattern, falling wedge pattern. What is it, how it works, and how to trade it? All right, let's learn this together. As you can see, we have that exact same pattern, right? Wedge, this triangle here. Let's pull it back up. All right, so price was going downwards. And then what should happen is price should continue higher. This is a rising trend. So let's watch. The falling wedge pattern is a continuation pattern that forms when the price oscillates between 2 trend lines sloping downtrend, and converging. A falling wedge pattern is regarded as a bullish chart formation. It can also slightly continue it could also signify continuation or reversal patterns depending on where it appears in the trend. This is significant confusion in identifying the descending wedge pattern because it is seen as both a bullish continuation and a bullish reversal pattern. Different market conditions exist in both cases, and these must be taken into account. The factor that distinguishes the bullish continuation from the bullish reversal pattern is the direction of the trend when the falling wedge emerges. The pattern is considered a continuation pattern during an uptrend and a reversal pattern during a downtrend. A descending wedge formation, which is bullish in technical analysis, indicates that the downward trend is losing momentum. It suggests that the current trend will either continue or reverse. The falling wedge pattern denotes the end of the period of correction or consolidation. Buyers take advantage of price consolidation to create new buying chances, defeat the bears, and drive prices higher. What is a falling wedge pattern in technical analysis? The falling wedge is a bullish pattern that widens at the top and narrows price and starts falling. The highs and low of the price action converge to generate a cone that slopes downward. The falling wedge helps technicians spot a decrease in downside momentum and recognize the possibility of a trend reversal. A falling wedge technical analysis chart pattern forms when the price of an asset has been declining over time, right before the trend's last downward moment. The trend lines established above the highs and below the lows of the price chart pattern converges when the price fall loses strength and buyers enter to lower the rate of decline. The price breaks through the upper trend line before the lines merge. The security is anticipated to trend upward when the price breaks through the upper trend line. Investors who spot bullish reversal signs should search for trades that profit from security prices increase. Okay. So this is a example on the chart of what the falling wedge looks like. And they're saying in a downtrend, the falling wedge is a reversal signal. Okay. So when you see this wedge, we are looking for buys. In an uptrend, the falling wedge, this is an uptrend, the falling wedge is a continuation signal. So either way it goes, they're saying the falling wedge is a bullish signal, okay? All right. So this is our falling wedge. All right. So we've marked off all of our zones. There's nothing on the 4 hour. I don't think that we need to mark. There is a fair value gap here, right? But price is already played out within that fair value gap. All right. Now, another thing to note on this chart when we are looking for our trade. So we've marked up all of our zones. We've identified the pattern that's happening on our zones, okay? Because a lot of times when you see price moving like this, it's some kind of pattern, okay? It's letting you know something. Like here, even here, you see how price is moving, and here. That's a pattern, okay? This is a bullish flag. That's the pole. This is the flag. And then price is supposed to continue. All right. I have to find a good chart pattern book. We're definitely going to go over chart patterns, guys. Okay, so we've identified that price is in an uptrend. We've identified our current zones. We've identified that this is a bullish wedge pattern. So right now we have 3 confluences to enter this trade. And we haven't even looked at our lower time frame candles. We just analyzed our weekly candle. So now I can come here on my 4-hour, right? I notice that I have a bullish wedge. What else is telling me that price is possibly about to go bullish? It came down, it rejected this zone. It came a little bit further, and it looks like it came into this fair value gap here. We didn't get full 50%, but it came into the zone, okay? And when it came into the zone, it rejected. And if we zoom in, price tried to fall, then it rejected. And this candle closed all the way at the top, leaving this with a really small body, long wick, small body. This is one of our candlesticks that we talked about. It's called a hammer pin bar. This is a bullish price action signal, okay? So along with our other confluences, we're in an uptrend. We're in a bullish wedge pattern. Price just rejected our zone with this hammer bar, all right? And then not only did it create this hammer bar, then when the second candle closed, it gave us our 3 pattern sequence, which is a morning star, okay? So price has come down to 50% of that bullish engulfing candle on the weekly, okay? Price is in an uptrend. Price has given us a pin bar. Price has given us a morning star. Price has given us a fallen wedge, okay? And now price is currently trying its hardest to stay on top of this zone and break out of this trend line, all right? So it's telling me that it wants to buy, but is it ready to buy yet? Let's go to our 1-hour time frame. All right. Now we're on our 1-hour time frame, and we see that price has broken out of our zone. But if we look here to the left, we have some kind of rejection right here. What was holding this back from buying before? I see right here, I have a fair value gap. So I'm going to mark this fair value gap up. And just to be 100% safe when I enter this trade, I want to wait for price to get on top of this rejection area. As soon as price gets on top of this rejection area and gives me some type of signal, candlestick pattern, give me another morning star, give me another pin bar, gives me a bullish inside bar, okay? These are all candlestick patterns that we talked about, and the videos are on my YouTube channel so that you can go back and identify these candlestick patterns on the chart. But as soon as price breaks this area, this is going to be such a clean area, right? That you can enter and then your exit back up here, and TP is 86 pips. All right. So that's our GU trade. We actually got into our buy down here because I saw my morning star and I had a whole bunch of confluences. Okay. So we're holding GU, but let's go over here. All right. We caught this sell last week. I am going to, let's see. I think we can come down to the 15-minute. And we're going to use these same zones because as you can see, price respected these same zones last week. And I'm going to put on our replay bar and we are going to go back and we're going to watch price. And we are going to identify our entries when the candlesticks are moving. All right. So I'm going to press play. As we can see, price brought up and it came to our zone. Here, I was looking for a sell anyways. Okay. Let me tell you when you identify to look for a retracement, right? When price pushes up, this went from one zone to the next zone beautifully. Price pushed up 110 pips in 14 hours. Okay, that's impulsive. If we look over here, this moved sideways like this for 19 hours. This didn't give me anything. When price gives you these crazy momentum in one direction, that is called an impulsive move. And whenever you get an impulsive move, you want to look for your correction. You wait on your correction to finish. Okay, correction is a pullback. You wait for your correction to finish, and then you look for your entry on the continuation, because price is telling you that it's bullish. Continue to go bullish until we have a break of structure. And we talked about break of structure the other day, okay? So price came all the way to our zone. When price is at your zone, you're looking to enter a trade, but we don't just get in a trade just because price is at our zone. We're looking for our confluences. So confluence number 1, price is at our zone. All right, we're going to press play, and we're going to see how many more confluences we can get before we enter our trade. So I'm going to press play. I want to make sure it's not going too fast. All right, so it's on like 0.3 seconds per candle. Remember, we are on the hourly time frame, okay? So price is at our zone. Price hesitated a little bit. I'm going to pause it. Price hesitated a little bit at our zone, right? Although we saw rejection, we did not have a candlestick pattern to let us get into this trade, okay? Actually, let me repeat that. We saw rejection, right? We had one confluence. Price came to the zone. Our second confluence that we could have used here is price gave us an evening star, okay? But remember, you need 3 or more confluences to enter a trade. So right now we only had 2. And good thing we waited on our third, because price would have bolted through our stop loss. Our stop loss would have been here. Price would have stopped you out. So price is still continuing its impulsive move. I'm going to press play. And this is every hour, okay? Every hour. So you can come back and check the charts every hour. You don't have to check it every 15 minutes because we're not on the 15-minute time frame. All right. Price has left our zone. It's no longer at our zone. All right. Still not telling us anything, because remember, it has to come back to our zone for us to enter. All right, we're going to pause it. Price has decided it wants to sell. Okay. Gave us nice impulsive move down. All right. Now, price is back at our zone. Remember, we still have 2 confluences. We just can't enter yet. This is GU, but we're not on current time. All right. First confluence was rejection. I'm sorry, price came to the zone. Second confluence, we had this evening star. All right. Now price is back near our zone. Let's see if it gives us a third confluence. We're going to press play. Price comes back. All right. Oh, guys, we are on the 15 minutes. I'm sorry. I thought we were on the hourly time frame. We're on the 15 minutes. So this is 15 minutes. Every candle is 15 minutes. All right. So price came back, closed underneath our zone. All right. It closed underneath our zone. And then if we really wanted to add one extra confluence, right here where we have this rejection, you can draw another fair value gap. All right. All right. So price came underneath this zone and it came to the fair value gap. This black candle price brought up Then this red candle, price is rejecting the zone. I'm going to press play. All right, price is back outside of our zone. Came back and retested our zone. The price is continuing higher. Now this could have, well, you only have one. This could be a confluence for a buy, but I don't think price brought up this high. All right, so price did buy up this high for a buy. So let me show y'all the buy, although I want to show y'all the sell. But there was a buy that was valid before the sell, okay? So this is our zone, right? We had two confluences for our sell. We still don't have a third confluence for a sell, but this is sometimes when you have to be nimble in the market, okay? So price gave us an impulse, right? It broke out of our zone, came back, retested our zone, okay? Now, when price retests our zone and then it trades away bullishly, is letting us know that it's not ready to sell, okay? So here we would have changed our bias, all right? So first confluence was break through the zone. Second confluence was the retest. Your third confluence for this buy was this candle right here. This is a pin bar candle, okay? Remember when these candles are really big, this candle's 25 pips. You want to wait for price to come back to 50%. All right? TP back at the high, stop loss below that candle, and it was a 3-to-1. All right? So now price has ran this high. Now let's see what happens from this high. We're going to press play. All right, we're getting some rejection from this high. But again, remember, we don't want to do anything because it's not near a zone. It's already hit our TP. Do we have a zone above? We do. I'm going to delete this one. We're just waiting for price to get back to a zone or get to a zone. This is Thursday. This is on a Thursday. Kind of want to speed it up right here. And real quick, this is another pattern. This is another pattern. It is called an ascending channel. Okay. So you'll see price give you an impulsive down move. Then price will start moving sideways up into a zone. It looks like it pulled back into this order block here. All right. It came to the order block, and then price continued the pattern. It is down. All right. This is another zone here. As you can see how price is reacting to it. This is a Friday. We're on Friday now. This took all day and forever. All right. Now we are back at our zone. Okay. All right. So now back at our zone, we want to look for another confluence for a buy or a sell. Right now, currently, we have one confluence for a buy at this zone. I see a bullish pin bar here. Okay. Let's press play, see what else price shows us. Definitely just left without us. All right. We got a bullish pin bar here. Okay. That's one confluence. And now we have an extremely bullish candle. Okay. Here, you want to measure this candle for price to come back to 50%. Price came back 50%. That's three confluences. You'll enter at 50%, take TP here, stop loss here. But the thing about this trade is it's not a 2-to-1. So it's not a valid trade. It's only 1.83. So we're not going to take it. We're just going to let price do whatever it's going to do. And good thing we didn't take it because stop loss would have been hit. Now price is back on my zone. All right. Price is back on my zone. It tried to reject my zone again and again. And now we've closed underneath my zone. All right. So now I can come back over here to the left and I'm like, okay, I got a evening star here on this zone once before, which was one confluence. All right. Now price is back at my zone and price has closed underneath my zone. That's two confluence. We're going to press play. I want to see if price is going to pull back and give me a retest. All right. I don't want price to run off without me, so I'm watching my candlesticks. All right. Looks like we're getting some type of wick exhaustion here. You see how the candlesticks. You see how these candlesticks were impulsive. We had a lot of bear movement, Now these candlesticks are getting smaller. And then we got that pin bar. So price decided to give us our retracement. So remember, we had two confluences. Now we have a break and a retest. That's three confluences. Price came back into this fair value gap right here. Came back into this fair value gap right here, and also rejected our other gap, which is this blue line right here. Well, let's see if it rejects. Giving us a pullback. All right. So with all of these zones here, right, we're not sure which one is going to give us our sell. We do know that though that this was our major zone here. Price sold down underneath our major zone, came back on top of our major zone. So now maybe are we changing our bias to a buy? I don't know. But now my confluence game starts over if I'm looking for a buy, right? So I don't see any candlestick patterns that's telling me to buy yet. So I press play. All right. Now I press play. Price has broken this zone. We're on top of this area now. Okay. Now my confluence here. I got a break of my main zone. Don't have a full retest. Price didn't fully come back and touch this zone again. But we can still call it a break and retest, okay? Break, retest. All right. Price came up to this area and rejected some and then gave us this nice impulsive candle on top. So I still only have two confluences. I don't have three confluences. Okay. Okay. All right. Now, as you can see, price broke on top of this zone. It kind of gave us some type of rejection here where you could have said this was a break and retest, but we don't have a candle, a price action candle signal, okay? So none of these candles are telling me that I want to buy. But I do see here on this zone, I see a bearish engulfing pattern now, okay? This candle right here engulfed this one and this one. So this is suggesting that price could fall again. We're going to keep watching. And this is on Sunday, okay? Ooh, pause. All right. So price fell, right? And it's for some reason, we got to have another zone right here. Because if I zoom in, because it's not touching that blue line. But if we zoom in, you can see right here, all of this rejection was in the same area. Okay. So there was some kind of retest, which now this is my second test of this area. So now my confluences for this buy, okay? We got a break of the zone. We got a retest. That's a confluence. Price bullishly left this area because this is one impulse move up. Price bullishly left this area and got on top of this gap. Now price came back down, touched this same area again and gave me a pin bar candle. Okay, if you didn't get in at the top of that pin bar candle, I don't suggest you wait for the next candle, because as you can see, this next candle is impulsive, and if we put our TP on here and our stop loss, well, it's a 2-to-1. This is a 2-to-1, which you always want, but majority of the time, if you wait too long when these candles are gone, the trade isn't going to be a good trade. So we're going to see if this one plays out. Okay, so we had our 3 confluences. Price broken retest, okay, which was 1 confluence. It gave us an impulsive move up, letting us know that it wants to continue moving bullishly. Okay, and then it came back, retested that same area again, and then let's add our indicator on here. Let's see what our indicator is telling us. So here on our indicator, this area right here gave us a low. Okay, this area right here. If we look at our indicator, price pushed all the way outside of the indicator. Although we didn't get a really big push on the chart, we still got a big push on the indicator. Now price, when it pulled back, and it pulled back here on the indicator, it gave us a higher low. You see that? Price didn't come back down. And now it's saying that it has room to continue higher. Okay, so that is also another confluence. All right, and it looks like price is going to come back and hit our stop loss. So this was a 14 pip stop loss. Let's see what happens. And this was all Sunday. This was all Sunday's price action. And then this is Monday, okay? So we really shouldn't be looking for anything on a Sunday anyways, but sometimes, you know. Like this week, GJ had a really good Sunday play. Okay, so at this point, price has broken this last high here, right? And gave us our second impulse, and then it pulled back, okay? And look, it just did it right here. I was going to explain what to do. It came back and hit stop loss. Okay, so look, we were up in profit, right? Price gave us this nice impulsive move. It came back, retested this area right here. You see that? Let me delete this real quick. It retested this area right here. Price came underneath it a little bit, but these candlestick bodies held above this area. Okay, so when you get this pullback on a trade, that is when you know, and price starts to continue, move your stop loss into profit. Okay, because price is either going to continue and it's not going to come back to this area, or it's going to reverse. And you see price came back and reversed, and you'd have got stopped out. Okay, let's put that back up there. So for study purposes, we got stopped out. We're now down 14 pips. Okay, but price is back to my zone. Price is back to my zone. If I zoom over to the left, I want to see what made price reject this area instead of just going back to this area that it's been at for a couple of times, right? And if I look, I see a fair value gap right here, and price just left from this gap here. Okay, it hit it once, it tried to come up, it couldn't hit it again. Now when we see candles like this, we know that something is up. Okay, price is trying to get somewhere. You see how these candles were moving over here when we was watching it, and then this one just played, it just completely dropped. That is when you know that the market makers are in the market and they have somewhere to be. Okay, So now we're back at our zone. Back at our zone. Let's come over and let's continue to play. See what happens here at our zone. So now our confluences start over. And now our bias is we're back to sells. Price came up to a zone. It rejected a zone. That is one confluence. Price made a higher low, okay, because this area is lower than this last high right here. That's two confluences, okay. Now we're coming to our zone. Again, we're watching this. Price hesitated right here, right? It hit the area, it brought up, and now it's selling and coming back underneath our zone. Now here, we can say, why isn't price just falling? We have a fair value gap here. Price reacts to these fair value gaps, y'all. All right. We're watching our candlesticks. Price is underneath our zone. It gave us a doji, gave us an inside bar candle, okay? Inside bar candle. There's this doji and then this candle right here. It's called an inside bar because it does not run the high or the low of either candle, okay? Inside bar candle is a third confluence, all right? Peter, we're back testing, but we're already in GU buys. We've been holding since yesterday. If you're not in, I don't advise you to get in now. All right, so an inside bar is a entry confluence, okay? So at this point, we have three confluences, okay? We have our rejection, we have our higher low. Our indicator gave us a double top, like a M, a Quasimodo. We talked about the difference between a double top, double bottom, and Quasimodos the other day. This is a Quasimodo because it's not making like a equal M. It's making a higher low M, okay? So double top price will be equal, okay? Quasimodo is not going to be equal. It's going to give us a higher low or a lower high, okay? So we got a Quasimodo on our chart, okay, which was giving us sales. Now here on my RSI, price is telling me that it's low. It's over sold. It's oversold. So I want to see on the indicator if price is going to try to come back up to the purple zone and give me an entry. And I also want to see what's going to happen at my zones here, okay? So I'm pressing play. All right. So here on my indicator, we didn't get a pullback to our purple area, but it looks like price is trying to make another higher low and continue lower. Okay. This is a solid break. Retest. Price couldn't close above this zone. So now I have two candlestick patterns at this zone. I have an inside bar, which is these two right here. This one and this one. Remember, it's inside the previous. And I have a evening star. Although this is a doji, this is still a bullish candle. Bullish candle, doji, bearish candle. Now I have like 4 confluences telling me to sell. So I'm going to do my short position. I'm going to enter at the close of this candle, okay? And my stop loss is going to be at my last structure point. And my TP at my next zone, okay? This isn't a 2-to-1. So let's see if we can tighten up our stop loss, okay? Here, I can technically call this area here a zone. This is resistance, okay? Where we got this rejection here, right? And price touched it there. So I can tighten my zone up and I can bring it down to here. And that gives me a 2-to-1. Because if price comes back to this area and it takes me out and it rejects again, I can just look for another entry, okay? But I don't want to miss the entry thinking that price is going to come back up here. So now I'm in the trade. My losses are covered just in case price does reverse, okay? And then my TP is set in case price goes my way, because again, this is a probabilities game. We're going to zoom back into these candlesticks. Hold on, let's pause. Let's pause. All right, immediately with it, we're in drawdown, but look down here on the indicator. You see how price pulled back into this indicator? Okay, let's see where price is going to pull back to. All kinds of drawdown, but it's okay. And let's pause it real quick. All right, so it was right to wait for this pullback on this indicator. You see how we got this pullback? If we would have waited for that, we would have gotten a better entry. Okay, it pulled back to this order block here. All right, which you can also see, look over to the left, we have more rejection there. Okay, now it pulled back there, it gave us an impulsive move, right? And it impulsively broke our fair value gap, which was this area that gave us our rejection. Okay, it impulsively broke it and retested it, and now it's trying to make lower lows and lower highs. So let's see if it continues to move downward. Looks like it's about to stop us out. Let's see what it's doing. So many zones right here, guys. And it's respecting every one of these blue lines. And I'm stopped out. And I don't like how it played me. But you see, stop loss happened. I have 2 stop losses now in a row. I'm down 33 pips plus 14 pips at this same doggone zone that has psyched me out. So I'm down 47 pips, okay? Now remember, we talked about risk to reward. ratios, and risk management. Remember, you can have a 30% win rate and still be a profitable trader as long as you are using the right risk management, okay? Now I'm just watching because I want to see where price is going to go to. Because remember, this was my last main zone up here, okay? Price decided it wanted to fall down to this area. This is giving me consolidation now because I don't have a new high or a new low, okay? And I can also, let's pause this real quick. This was my last high, right? And this was my last high or low that led me to my last high. I want to delete the chart real quick and then we'll get it back. All right. So now here and here. Price made a lower low here, right? But it's not confirming ourselves, shall I say, right? It keeps falling underneath here, and it's definitely tricking me out at this point. It keeps falling underneath here, but then it's still buying. Okay? We can actually draw a trend line here because it looks like it's let's do this here. Giving us a pattern. So this is why we have to know where we are in the market, okay? So I'm going to keep this now as my current zone and here, okay? All right. So this is telling me that it wants to come back up here, but this is also a zone 2. So let's do this. All right. Now let's press play. Price is back at this zone. This, I can't pause it fast enough. This is a bearish pin bar candle. Whenever you see price come outside of the zone, right, and then come right back in the zone impulsively like this, barely any wick towards the bottom of the candle, that's letting you know that it has bearish movement. When this candlestick closes, this is giving me an evening star pattern, okay? Bullish candle, doji, bearish candle, which is letting me know that price is coming back to sell, but it's at the middle of a zone. So let's keep playing it out. This is Monday Asia session. These zones are only a few pips, which is why I'm not trying to take this buy, right? I want to look for my major sells or my major buys. So we're just watching it. Although this was a break and retest, price continue higher. I want to see if price is going to come back up here, back to my major high. All right. All right. Tuesday London session. Price is back at my major high up here. I want to see if price broke this area here. It hasn't ran this high, okay? It hasn't ran this high. Price went above this zone and closed underneath it. Now, if we look at this, this is one test. This was two tests. That's a confluence to sell, okay? This was our first rejection. Price sold. This should be our second rejection, and price should sell. All right, so that was one confluence. Price closing underneath the zone with this bearish candle is two confluence. Let's see if we can find a third one and see if our sells are valid. All right. Price ran liquidity. It ran this last high. Doesn't look like price wants to close on top, but let's see what it does. This is why we wait on our candles to close, okay? Price came, rejected this area, came again, rejected this area. Now it's giving us a bearish candle. This bearish candle is closing under the zone, and it gave us an evening star. That was our third confluence. We want to take it back down to our main zone here. Stop loss above this wick. It's a 2-to-1, 57 pips. And remember, we're down 47 pips. So if we win this trade, we'll be up 10 pips. Stop loss hit. We're down 23 more pips. 27 plus 23. Hold on. We're down 70 pips. All right. Pause it, pause it, pause it. We're down 70 pips. Okay. Our trade hit stop loss, but we still have our confluences. Our trade decided to not continue its buy, right? Came back underneath our zone again, gave me another confluence, which is a bearish engulfing candle. Okay? Bearish engulfing candle. So we re-enter this trade. Stop, enter at the low of that bearish engulfing. Stop loss at the top of the candle that created the engulfing. TP back at our zone. It's a 2-to-1. All right. TP hits. So remember, we were down 70 pips. This one trade made up 50 pips. Now we're down 20 pips, okay? But that was 3 trades. 3 trades, okay? 2 of them was a loss. 1 was a win, okay? Now we're down a negative 20 pips. Now, we're not immediately looking for another trade, right? Because we just won one. We just want to watch, see what's going on, and we'll wait for our next opportunity. This is still Tuesday. Okay, so let's let it play out. Sorry. I wanted to look at the what was going on in the bigger picture. This is definitely consolidation, y'all. If you can see how price is just staying in this area, okay? Price has now created another trend line, right? I have a rejection point and a rejection point. So as the chart is moving, I'm just adding more to it. All right. So now I want to see if price is going to come back up to this zone and if price is going to trade outside of this zone or is it going to reject it again? And this is Tuesday Asia session now. So nothing's really going on during Asia session. Most times it's not. Most times it's just sideways movement. But sometimes you get some impulses during Asia. All right, remember when we see impulsive candles like this? That's the market makers trying to tell us something. Is Asia 12 o'clock? So GBP, you would like to trade GBP during London and New York session mainly because GBP is a London currency, is the pound, and then US dollar is a US currency, okay? So the market's trying to ramp up for London session. It's now 12:45 midnight. You see how price is rejecting to this trend line here? If I pause it, price came to that trend line and the zone and it tried to buy from it. It gave 2 very bullish candles. It tried to buy and then price couldn't hold up. Now it's continuing to sell. All right. So while we were in this area, price gave us a high and it gave us a higher low because it's not as high as that high. Okay. It's giving us some impulsive down moves. Now we are back at our zone, okay? We've touched this zone several times. Okay, y'all see this? This is consolidation. This is sideways movement, okay? Now we want to know, is it going to reject the zone again? Because if it rejects the zone again and give us our confluences, we can buy it back up. If it comes back underneath, retest it, then we're going to sell. Zoom back in, look at our candlesticks. Okay. So for a buy, right, over here, price broke through, it retested, right, but then it gave us a bigger break and retest. That's one confluence. Second confluence, we got a Morningstar pattern here from its rejection. Okay, now let's see what happens over here. All right, so it's not giving us any rejection candlestick patterns. Now price is trying to trade through. It's like regrettably trying to trade through too. Let's look at these candlesticks. It came here, it rejected. It came underneath, it's still trying to push up. Came underneath, still trying to push up. It literally closed right on top of the area, or a little bit underneath the area. Then pushed back down, still tried to push up, tested it again. Like, this is such a strong area in price. All right, we're starting to trade away from this zone. Oop. So now I zoom out and I'm like, are we selling or we're buying? We did not reject this area to go higher, right? We also didn't make a higher high. We made a higher low, okay? And price just broke our zone. Put my indicator back up here because I don't know how I keep deleting it. All right. On my indicator, I am getting higher lows and lower highs. Although price doesn't look like that up there, it looks like it down here. Now remember, we're low on our RSI, so let's see if price pulls back on our RSI and pulls back in price to let us in the trade. And if we're going to see some rejection, we'll probably see it here at this trend line. Okay, let's pause it. All right. So price shot up on our RSI to this middle area right here. Okay. It looks like it's giving us a bend. We're still looking for our candlestick pattern though. All right. All right, pause. Oh my gosh, it happens so fast. Pause. I was pausing it because price came up, right? It gave us our pullback that we needed on our RSI. And I noticed rejection. I noticed rejection right here in this fair value gap. And when price rejected, it gave us an evening star pattern. So this was my last confluence that I was looking for to get in this trade. Now, although it happened so fast, you would have entered right here at the close of that evening star pattern, okay? And stop loss would have been here above this rejection where this fair value gap is. And then TP is at a zone beneath. We don't even have our zone marked up because I deleted the chart. So let's find our zone real quick. Okay. So here's a fair value gap right here. We can use this for TP. All right, and then as you can see, if we pull that over, this is where we got this rejection here. So if we pull it down, let's fix our stop loss. This is 2.25, which is a 1 to 2, and it's the trade that we'd have taken. Our TP hit, and we gained 29 pips. So remember, now we're on 4 trades. We was down 20 pips. Now we're up 9 pips. Okay? Now, when you see candles like this, hold the trade. You see this candle? Impulsive candle. The market makers have come into the market if you're in the trade. This candle, this one candle gave us 47 pips. Okay? Down here, I see another zone. So let's see if we can get some continuation to this area here. Okay? All right, and so now our second TP would have hit. All right. Now we were up 9 pips. Now we're up. Now we're up 48 pips off of 5 trades. Okay? So stop loss is inevitable, guys. As you can see here with our back testing, we're marking up our zones. We have all of our confluence, right? But the one thing that I didn't realize, and you can't even realize it until the big picture happens, right? We were in consolidation, and you won't know you're in consolidation until consolidation reveals itself, okay? Now we are starting to become and get into a trending market, right? Where price is trending here, okay? So hopefully you guys gain something today from entry techniques. Look at this zone. And I think we're going to do the same thing tomorrow. We are going to continue entry techniques because a lot of people still have questions on when to enter, right? And it's not just, it'll never be just as simple as 1, 2, 3. If trading was just as simple as 1, 2, 3, everybody would be trading, okay? Everybody would be trading. Stop loss is inevitable. Risk management is a strategy of its own. Okay, you see all of those losses we had. We did 5 trades. We had 3 losses, 2 wins. Okay, those 2 wins put us back into the positive, but it will only put you back in the positive if you are using the correct lot size. Okay, if you over leveraged on that first trade, right, and that first trade I think was like a 30 pip loss. Let's say you did a 1 lot on your first trade, knowing your account couldn't handle it, Now you're down $300. And now you're lowering your lot size because you over leveraged your account. And now you're trying to make it back up, and then still went back and did two more losses, right? And then you finally got your two wins, but those two wins aren't pulling you out of your hole because your first trade you over leveraged on. All right. Nobody has a 100% win rate. When you find them, please introduce them to me because I want to learn their strategy. All right. So, any questions before we are done for the night? It's gonna exit replay mode as soon as I can remember. There we go. All right. I have to remark my chart up for GU so we can do that together real quick, and then I can get off. All right. So again, I'm on my monthly time frame. I just want to mark my zones up. Gonna mark this area. What else do we have? I never marked this trend line, but I'm gonna mark it now because I see it. Okay. And I'll mark this order block here. All right, now I'm gonna come down to my weekly time frame. Here on my weekly, I can tell right here that this was the area that price needed to break, right, in order to go higher and retest. I'm sure there's a gap over here somewhere. Let's find it. All right, it's right here. I'm going to delete this line so that I can get a more accurate zone. We'll use that one. Okay, and let's come down to my daily. All right, guys. So remember, I'm in a buy. I just want to put my buy tool back on here. I got in here for that 4-hour candle. I'm taking it up to this zone here, and stop loss is here. But I'm currently kind of skeptical on this trade now because I see that price is starting to make this little move right here. Oh wait, we did just look that up. I forgot just that fast. It was a falling wedge. Let's put that pattern back. All right. In order to draw your trend line is first rejection, second rejection, okay? And then just draw it out into the future. And then we had one underneath. All right. And remember, we decided that this was a falling wedge, which is a bullish candlestick pattern. So price has come outside of my trend line, and now it's kind of moving sideways. Let's come down here on the 15-minute. And I want to look at my indicator. Price is kind of high on my indicator. It's saying that it's oversold, but on my 4 hour, there's still some room to go. And price is making like higher lows and higher highs. All right, so I'm still in this trade. I'm going to hold it, but I think I'm going to move my stop loss to entry. So make this risk free, okay? All right, guys, so if we don't have any questions on our entries, we are going to end today's live, and I'll see you guys back in the morning. What's tomorrow? Thursday. I'm not sure if we'll get into a trade tomorrow morning because we're already in 2 trades. We're in a euro odd sell. My stop loss is at entry on this sell though, because it looks like we're going to get our pullback. I really want to enter here. Okay. So it looks like we're going to get our pullback. If price pulls back up to here, then I'm going to re-enter my sell here. All right. I'm not going to scan the market because if I scan the market, then I'm going to look for a trade. And I know we don't need to do that. This one already hit TP. And most of our trades are out. We're up 500 pips for the week, so we're not going to be greedy. All right. All right, guys, we don't have any more trades. Thanks for joining me. I'll be back tomorrow at 8 a.m. Central Standard Time, and then tomorrow evening for another lesson. We're going to continue this. We're probably going to continue this back testing all week, okay, so that we can get our entries and our breaks and resets down. And then next week we'll start our chart pattern book, which is, the falling wedge, head and shoulders, rising wedge. There's so many chart patterns to learn. All right, guys, I'll see you guys later. Have a good night.